Good afternoon, everybody. Currently 1:30, 1:15, sorry, in the morning. Lord have mercy. Currently 1:15 in the afternoon for us, and we are about to have New York Open. So we're going to do some analysis on the players that we have, and then see what we can do if there is any potential opportunity. So first things first, there is no news today or tomorrow. So Wednesday, Thursday, we're good. So we don't need to open this. And yeah, we already know we're on day 67. Now, this is DXY. You can see top left over here. We are in DXY. And this was the analysis we had from yesterday. This is what we said will happen. We said that price would take out this liquidity over here, fulfill this upper half of the fair value gap, and then move to the downside. What did it do? From the moment we called it, it swept that liquidity over here. Then it went to the downside, right? In fact, let's bring back the YouTube so we can even show you that we spoke about this. But before that, whilst that's loading, we spoke about DXY when? Let's see. Right here. What did we say? So we got this right. It will come down here, sweep this liquidity, hit this order block, push up to this liquidity over here. Once it swept this, it will come down. I don't think I mentioned DXY again in the Telegram. So we're going to go back to the live stream when we did mention it, which would have been potentially this one. Good afternoon, British folks, and good evening to the rest. Yeah, my intros are the worst, I swear. Start with DXY, which will give us a bias for a lot of USD pairs. It's currently 8:48 American time. So we start off by getting the New York midnight open. Getting the New York session open. Imbalance from here to here. So it's plausible we go up into it before we go down. Especially with liquidity resting. What did he say? Plausible we go up into it before we go down. So what is this? We went up into it and then we went down. Okay, well, let's continue. So the main thing is going to be interesting now because we are at a turning point. Technically, we're bullish in terms of bearish, sorry, because we are market structure's been broken to the downside. We've done X, Y, Z, but we've also filled this fair value gap up here. Rejected. You can see we made it to just above the halfway point, fell down. So we didn't even fully fill it. The similar thing has happened. We have a fair value gap from here to here, based on the daily time frame that is. From here to here. And we've come up to get similar to this area. So it could reject from this point onwards. Yeah, our market repeats itself. Basically referring to this, that how this didn't reach the top, yet it still came up to just above midpoint and dropped. Right here, we came, to be fair, we actually did fill it in the end, but we actually did fill it in the end. But my point was that we could even not even come all the way up. We don't even have to reach this liquidity before we come back down. So with the midnight open, we literally rallied upwards and clearly the space will expand to the upside. From session open, if we want to continue going up, we might come down first, then go up, and then come back down. So it's basically like a trifecta. We can have manipulation here, taking out this low and maybe low down here, lows down here. Manipulation to then distribute up here, or we could go further into the fair value gap and then drop, or we could just drop. So I don't know which one's yet because based on the daily time frame, if you ask me, midnight I would have said we are bullish into this fair value gap. Suppose we go up into this fair value gap and then come back down. So I'm gonna try to draw a fib to see some ranges. I'll delete lines, but I don't know what they mean. Oh, that's the previous stuff. Yeah, I can go. So if we look at the power of 3, we opened over here. We manipulated down here, accumulated buy orders. It looks like we're distributing up here. But then this could all be a part of like a power of 6. Now we've distributed. We then have manipulation, accumulation, distribution. So it's like a swing, 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 swing. I just don't know if this will all happen in one day. Another thing is this low, this high. We're drawing the fib. Here's what it's like. We are in a discount range up here to this range up here. Mainly just because this move has kind of already happened, which is what we predicted. We are expecting to drop from here, but I just don't know if it will be today. So maybe if we want to enter some sells, we want price to rally up here before it goes down. So what happens? He said once rally up here before it goes down. That's exactly what happened. And you get the gist. We predicted this yesterday. Now, why am I doing this? It's not to say I have an ego. I'm literally learning. I'm a student, right? I don't have everything together. But I'm just showing you that this works. Number one, not the model itself, but also the consistency in learning the model, finding the model, the diligence, the skill sets, the psychology is good, and making sure that you're sticking to the rules. So that was just a little bit of just going over what we did yesterday. And we did say that this would most likely deliver towards, like, we profited off of, I made profit from this move right here. I predicted it would come up and go here, and I only capitalized on this kind of black candle here. That was where I made my money, and I doubled my account, I think. I didn't get involved in this whole push. I got pretty much up to here. I got this move. So in all of this, it's gonna be a 1 to 20. I got 1 to 3. So you may say, "Oh, CJ, why didn't you hold?" Simple. I have my rules. First of all, I'm happy with 1 to 3. Would I rather a 1 to 20? Of course, you're gonna be. But what's the beauty of what I did? I stuck to my rules. I took out most of my trades at this level. I was anticipating it could continue higher, which is why I even drew this liquidity in the first place. But I let the other two run. I just set it to break even. I didn't want to have any losses at all. So I did have 29% roughly of my trade open. So I did set that to break even. Now, if I had held it at my stop loss, put my stop loss here, this, if we go back to the UK time, doesn't matter as long as it's UTC. This happened at around 9. To be fair, we actually still would be in the trade. I'm not gonna lie, we actually still would be in it. But the spreads around 10. It's not guaranteed, because this is the open of 10. That's 5 pips. Easily, we could have been stopped out overnight. And I didn't want to do slippage, but we're learning. So I may be wrong on that. And actually, UTC is 5 hours. So no, this is 10 o'clock. Yeah. 10 o'clock. Because, yeah, it's 122. So, yeah, this was actually around spreads. So, right here, from here to the stop loss would have been 2.8 pips. I've seen spreads go to 20 pips overnight. So, we may not have been in the trade. We may have, I don't know. But my broker, from my experience with my broker, I don't think I would have been in the trade. So, we can go back now to New York session. Right. So, that's the gist of what we did yesterday. So, what are we going to do today? So the next thing is the same thing. We're just going to do the same thing, right? Let's remove all the drawings. We don't carry over yesterday's wins to today's wins. Today's wins is separate. So we're starting on the daily time frame as usual. Let's make this full screen. I am literally going to do my best in predicting whether we are bullish or bearish. Now, there are some things from the old setup I want to do. So we have filled this imbalance and dropped. We've taken out these equal highs, and there is some of this imbalance that is yet to kind of be filled. I'm just going to do it like this so I can know which parts price hasn't been to. So there is imbalance up here. We then also have some equal lows right here. Okay. So there's some sell side liquidity, untapped sell side liquidity over here. We created it here by obviously creating these equal lows. Then if you look for bullish reasons for price to go up, start from a fib. So we have a high over here and a low over here. we are in a discount within this range right here. From this high to this low, we are in a discount. So that is obviously keen for buys. Now, there is something we learned very recently, which is when price hits your target. So I believe it's this. No, that's not it. Wait. I actually do think it's this. I didn't word it well. Maybe it might be before. Let me double check. I remember writing that. If I had anything, I would put target. Mm. No, I haven't written now, but it's essentially talking about what happens when you hit your. Why don't I have that? I think it's in episode 27. Happens when price hits your daily target like this. If I had to guess, I think we're still bullish. Like, I think we can still go lower. We need to take out these lows properly. That's my, instincts, but it's not clean right now. So I'm waiting. What's the time? 1:26. Why is it loading 28 when I click 27? I'm looking for a point where he talked about what happens when price hits your liquidity target.
It's trading here. Okay. Friday, Thursday, Wednesday, Tuesday, Monday. So we had a nice little decline down in equal highs up in here. Look at the high of that candle.
Pretty sure
Doesn't
the next
need
candlestick.
to get there, as you'll soon see. We're going to drop down into the hourly chart. All right, so here's the hourly chart. You can see relative equal highs up in here. Look at
Might be 26. Yeah, I think it's 26. Probably why there's no. Yeah, trading against the bias.
the sell stops or sell side liquidity being taken. We've already traded into a fair value gap around. All right, so we're going to be doing a quick little ditty on institutional order flow. I'm going to be trading against daily bias. Okay, going long here, and it's on the basis of the sell stops or sell side liquidity being taken. We've already traded into a fair value gap around that 4,000 level. And I'm trading with the idea that it could run up here and take out the buy stops above the high of the day. It doesn't need to do that to be profitable.
No. So, I'm not sure if I can find it. So we'll have to do a deep dive. Anyway, we have sell side liquidity still here. If you go to the power of 3 on the daily time frame, I don't know, I call it power of 3, even it's not. We had the manipulation up here. We've had the drop to this low here, but we've only created equal lows. We haven't actually taken them out. So here when we create equal lows, you normally have a rejection and then eventually take it back out. So it could be that we reject upwards. Oh, this one's tough, huh? hello. This is a daily chart of which we have taken sell side liquidity, and we have a range that is range form that is from the extreme low and extreme high price at equilibrium, and the most recent candlestick is on is that an incision. That means we need a pullback. Fair value gap. So the high, I think it was that range from here to here. We're at this equilibrium on the daily. It's not what we need. So when we get to a target price, we need to stop after hits because it's a time for us to recalibrate. It is okay to not know C chart for reference. So as he said, he doesn't know where price is going. Ooh, maybe I'm at that level. Yeah. The way we know if buyers should be bullish or bearish is by selling the idea of bearishness and seeing if it is far fetched in comparison to selling bullishness, and the idea that it's easier to sell is the likelihood of what the biasness of price is. Even the word. You can just put bias. We need to respect risk management. That is why we take time for reference with an analogy that is possible to trade against a trade, but we need to be careful of how we trade and what bias is. So here he says he doesn't know because he hit his target. But the best way is this. What episode is this? We went in on this one, 11, episode 11. It's level 11. Okay, episode 13. I think I have an idea what price will do. I think it actually wants to go up, but to do so, I think it will need to sweep first and then go up. So you might get this sweep today, and then tomorrow you might get this distribution upwards. So what are the levels in this fib? 0.5s, uses 0.5s. Okay. Okay. All right. We got a little bit of information. Not exactly what I was looking for, but decent amount. Anyway, our idea is it's officially 130. Is for price to come down a bit, then go up. I think we could be looking for sell. So what I think is going to be happening here, the price is recalibrating to an area where it can sell, and then you have the utmost high here, you have the low right here, and I think what could happen is price retraces into maybe this area just above here where there's a big fair value gap, big area of displacement before it wants to then go back down again. So there is this fair value gap in this fair value gap, and I think we can start preparing for sales here. But allowing for the opportunity for price to hopefully not to reach up here. So price could come back into this level and then come back down. Ideally, we don't want it to go above here. So it will stop us out if that idea is wrong. So we do think that it's going to sweep the liquidity first because we've just created equal lows. There's no way that smart money wants to leave that open. So we're going to be bearish up until that point. And then, so in other words, if I was to be a bit more precise with that arrow, I'll be expecting something like this, a sweep, and then like this, right here. Okay. So what that means is that because it's 1:30 or 8:30, and we start kind of trading from 9:30, I'm expecting this to all happen within this time frame, and then this to happen soon, and then this can take its time. So to recalibrate or clarify, I'm expecting price to rise up into this fair value gap, into this kind of premium area, drop, sweep the liquidity, then use that fuel to then push the upside. So what that means is that we're bullish on this still, but we'll be more kind of prone to look for a big Judas swing, essentially. So I'm going to start by analyzing the charts and get rid of some of this liquidity here. And let's go to midnight. Let's go to midnight open. Go to 8:30, and then 9:30, and then let's mark out some of these zones. So midnight open is candlestick right here. This is the midnight open. We then have the session open. Started around right here. And this is the session open right here. So what I am expecting is since we're actually bullish on the dollar, and then we're bearish overall. So bullishness means that we are bearish for the swing, which would account for these equal lows right here. Then I'm bullish up until we sweep liquidity on DXY. So basically, I'm expecting this, and I'm very confident because everything lines up nicely. We can see these equal lows right here. So we can even get another line, and then we can call this sell side liquidity. I'm gonna go right here. Just gonna extend it a little bit more. So the midnight open and the sell side liquidity lines up. Then that's not enough, right? We then need for price to displace taking out one of these highs. So as of right now, something like this. We could potentially get some nice scalps actually. So anyway, I want to know when price sweeps this. This is of high interest to me. Wait, not. I want to know when it's approaching, not after it's happened. Remember, I'm doing this live. Like this is not black. What's it called? Replay mode. We'll actually set this liquidity nice on EU. See what I'm saying? I set this target. That was my overall target, and they reached it. Nice. I forgot what my entry was though. Probably around here. No, that's around 3 o'clock. So it would have been. Did we sell or buy? We bought. I don't remember. Oh yeah, we bought around here. Yeah. This would have been the place to buy. It's interesting, like when you start to learn this, you start to see it a lot clearer. Cool. Anyway, with that idea on. Yeah, that was Tuesday. So we would have got in kind of here. So this is Wednesday. It was interesting. Sweeping buy side, displacing. This is where you would probably look for fair value gaps. And you probably want to target this one. This is what I'll be looking for sales. If I was super confident, this is what I'll be using to target some liquidity areas. can get rid of these and change this to new color we use. Well, actually, we still actually do need to, I forgot, we actually do need to have the bias as well for this. So we are what? Bullish, right? I'm going to have to get rid of the words that are not necessary. We are in a premium, but how far can price go? We use the 1.5 as the target. So that 1.5 line is actually key. So we believe price can get to. So even when we drew this, this is actually our overall target. Of course, we'll take some along the way if we get into the markets. Now, the daily bias, we're obviously in a premium, but from DXY's bias, we're actually bullish on this pair. So it goes to high interest. Put this in low as till we fully analyze it. So we're on E right now. This is a short-term potential counter trend idea where we've taken some buy-side liquidity. We've displaced. It's the leg. And we mark out some of the timings. So midnight open. Here, 8:30 is here. 9:30 is here. So with that, we can then get, zoom in on this. Need 1 minute. Does it lose? Does. Okay. Grab that again. Just do this. Then we can get to T. Open. Get to, yep. Opened this candle. Okay. Minute open. This is fine actually. It shouldn't open. So if I was just using the model without bias, this is what I would enter. This place here, this is in the optimal trade entry. Pull back to this area. Stop loss above this one candlestick here, targeting liquidity down here. This would be the trade I'm looking for. we shout? It's a very good question. Why do we shout? Because shouting is important, but why is shouting important? You see, sometimes it's good to know who you are. We learn in mentorship that you need to describe who you are and who you're not. I've taken that thing seriously. Why? When you look at people that are alive, they tend to be loud. It's a sign of life. When someone's quiet, see, the one place I know that's very quiet is the grave. But there's a song, and the songwriter says, "Only the living can praise you. I am alive, so I praise you." And then what that person caught, I believe, is that sometimes I don't praise because I feel I don't shout. I don't like shouting. I'm a very quiet person, but I shout the loudest. Why? Because for me, it's a identity. It's a because I can shout. It means that God has done a good job. God has kept my vocals. God has given me life. So for as long as I have those things, I'm gonna shout because it's a sign of praise. It's a sign of Lord, look what you've done to me. So sometimes when we do things, we do them because we're making a point. I'm making a point that I'm alive. I can shout that the Lord has been good. So that's every time I pray. I don't have a problem with shouting because of that reason. True. I need to work on that. So now this is I forgot streaming. Yo. Anyway. So with this, this is a idea if I was only looking at a counter trend idea, right? Because our bias for DXY is short term bullish, long term bearish, and then very long term bullish. So I'm expecting a boom. So what that looks like is a boom, boom, and then a boom. Now with EU, I'm not actually feeling it as much as AU because we've reached the ultimate target over here. Now, on the daily time frame, you can maybe argue that we haven't reached up here. So we could even be targeting some of these highs up here, right? I don't know if that's going to be enough because we are in the premium. So there is some ideas for sales. Now, the idea for sales would be we've short liquidity, we're in a premium, we could be targeting downwards liquidity down here because there's a lot of equal lows. So there is a strong case for bearishness on EU, right? The only thing about this is that it does not support the idea we have for DXY. DXY is that our idea is for price to come up, fully sweep this liquidity, then make the large push that we are, as we are in a deep discount on the daily time frame. This daily time frame here, from this high to this low, we're in this discount, and we could be targeting up here some liquidity, which there is some highs, some imbalance left from this, because this is what is the whole imbalance. Because we filled this, I just said this is the unfilled part of the fair value gap or the imbalance right here. So that's the kind of philosophy behind that. So EU doesn't agree with this because remember, the inverse will happen, right? Because DXY is on the opposite side on the pair. So what does that mean for us? That means that we would need for price to go up a little bit. No, so let me zoom in a bit so I don't get it wrong. We need for a little bit of price to go down, price to go up a bit more, and then go down a lot. So down, up, down. Remember, down, up, down. So what we are looking for based on DXY is down, up, down. So what I can even see happening for EU is a down, which would be a part of the manipulation, which we're not going to be a part of, an up, so we'll be targeting this right here. Then we can enter sales for the down that supports the idea of this large push after we sweep this liquidity. So maybe EU actually does agree with it, but it's a bit more technical. With AUD USD, the only difference is we don't know when price will go down. So what is the idea here? So the idea is for us to sweep. So remember the opposite, because what we have from DXY is this shape. We have a pullback into the fair value gap, a sweeping of that long-term liquidity, and then a push upwards because we're in a deep discount as a context. So we want to target a liquidity up here, which there's some imbalance we have left. So we need the opposite here. So here we have the down from this part. We have the bigger up from this up part, and we have an ultimate targeting of down afterwards. So both of those things can play out. So let's look at GU and see if we can see that. But let me just double check. I have all the, okay, you have session open. We're going to sweep this equal lows right here. So this can even be sell side, and it's also the fair value gap right here. So if I draw that fair value gap, but there's equal lows here. So I'm expecting, though this is a fair value gap, expecting for some of these equal lows to be taken. So we could put sell side liquidity right here. And then I'll say, I get those. So there's a target we have over here. I'll just change the color, the size of it. So once we target this, we then want to target this, and then we want to target liquidity down here, which we'll figure out another time, right? But that's the general idea. Okay, AU, same thing, but the only thing is would have to be passive. We don't know necessarily where our areas would be. Now this line, I'm trying to think where it's come from. I think it was meant to be this, which is a potential for where price can get to if we are going to have a deeper pullback than we think into that area. Because if we go to DXY, it has the potential to go up here, right? So we're just targeting here because we think it's going to get to here. I think it's going to reach here, but I'm leaving some room for it because it can obviously get to here. So with all of that information together, sweep, push, sweep, retrace, displace down here. Okay. Right. So side imbalance. Bam, bam, bam. What's the time? Currently 2. So in about 45 minutes, no, like 45 minutes. Yeah, 45 minutes. To expect price to swept this liquidity. Then we would actually enter buys on the smaller time frame. Probably enter on the 1 minute to buy to this area. And then from this area, we then look for sells. We can hedge this idea, right? So now we just need to make sure that idea is shown in GU. So what we can do is get rid of some of these. 2 doesn't make sense right now. 1.5 fine. So we're also in a premium. We have some equal low highs over here. Some very good buy side liquidity right there. We're yet to sweep it. Although we are on a discount, a premium price, I think would want to sweep this liquidity first. So with that being said, we're going to mark out the relevant times. Get the trend line opened up here. This will be the session midnight open. We can swipe across. This is the market open or session open. Zoom out a little bit. Check it out. Okay. Also have some liquidity over here. Sell side. So we can simply just see how this is also into an old fair value gap. Let's just do it again. One here to here. Okay, so we're expecting for price to sweep this and push up. The difference with this is that I'll be targeting this area here. So I think when I'm looking at all of this context, I think we might have a deeper pullback. The only thing that disagrees with it is GU, because GU's target would be here because that's where I'll be entering to enter for sales. Potentially can go up to order blocks then. So this last candle right here. Potentially get an entry over here as well. It's the low hanging fruit right there. So we're going to keep that. So this is the idea we have. So we're going to collate all of this into the Telegram. That's GU. Where's EU? Sorry. And this is EU. And then that. And let's open DXY and show that analysis as well. Try to get as much as possible. I can't. There's so much stuff left. That. Okay, perfect. So now we wait, just like that. Hold on. Okay, I thought I just swept it for a second. So we're just simply waiting now for sweeps. So we've got AU alert, set, an EU alert right here, and a GU alert right here. Boom, just like that. We've got 3 potential ideas, and this could be a very big day, like very big. Eh? I think we could potentially. Let me see this. Potentially 10x today. Potentially. We'll see. We'll see. That's best case scenario. But let's take it step by step. I'm gonna use the toilet and have a little break, and then I will be back to see where the markers are at. Depending on how long I take, I'll be watching on my phone as well. Have my alerts, and then we'll get into episode 29 as well. That is on the cards. So yeah, for now, I'm going to leave you guys to keep managing the trades for me, and then I'll be back. I'll be back. Yo. So we're back. What's happened so far? Well, we've set the equal lows. We're waiting for displacement. Taking out one of these highs, which when it comes to AU, we can take out this high right here, which will be the market shot to shift. Once you have that market to shift, we then draw a fib on the range and then wait for price to come back down to a fair value gap within the lower half of the Fibonacci range, and then that will fund our buys to the upside, of which we would then target these highs over here. Now, the same has also happened with EU. Again, market shift will be over here. Like we're literally doing this step by step, you know. GU, same thing. We've had the sweep. Now we're waiting for taking of these highs. So the question is, what if price doesn't come to or do the things we're saying it will do? Then guess what? We don't trade. That's the beauty of it. Because we don't trade it, it means that we don't lose money. That's the beauty of the model. If you don't see it, you don't trade it. Okay. So market shift is not just taking out the high. If it slowly takes it out, we don't care. But that's not market shift. It needs to forcefully displace when taking out a old high or old high or low, in this case an old high. So when that takes out, I wanted to do it with speed. AU looks like the closest. So I'm going to set the alert on AU. Normally they move in tandem. You can see there's liquidity on all three of these pairs. Price has swept all three of those liquidities at the same time, which, guess what, is lining up with this. Now, we thought price would go up here, but it is very plausible we only make it to here. Now that I see the charts. But yeah, we'll see. We're under 1 minute because we want to get the sniper entry. So I'm going to show you can do that. But the first thing we need is a market shift. So more waiting. But waiting is not a bad thing. So but I'm going to set an alert on all of them. It does this sometimes. So with those alerts, I can now comfortably bring the mentorship. So we're in episode 29. Let's go.
This is episode 29. I'm going to be doing a brief review of what took place today. I obviously executed today. I wasn't planning on doing 2 videos, but obviously by the comments, some people are a little bit confused. So I kind of want to bring your attention back to that 12,553 and a quarter level, which is the relative equal highs here on NASDAQ. So that was kind of like the basis for why I went into the market today, Monday, the 16th of May, 2022, with a bullish bias. I was looking for this draw on liquidity still for NASDAQ. I originally went in looking for a trade in NASDAQ, but right, and the S&P, much like the NASDAQ, had a daily swing low. And while we didn't have relative equal highs here for S&P, the bias was, in my opinion, warranted for at least the beginning of the week, looking for a continuation on the outside. Before I get into it, tomorrow, which is Tuesday, May 17, 2022, 8:30 in the morning New York local time, we have retail sales numbers, and then 2 o'clock in the afternoon New York local time, we have the Fed chairman speaking. So there's going to be all kinds of volatility at 2 o'clock tomorrow. That's the reason why the market was kind of like lethargic today. But I wanted to kind of like showcase something. So today I kind of like want to put a nail in the coffin finally about this whole business about rented in T4 servers. Okay, I'm never going to bring the conversation up again or the topic again. I think everyone knows now by seeing what I've done here just in a short span of time. If I did this for another 5-6 weeks, you could clearly see that it's not impossible for the same things I was doing on Twitter years and years ago. Okay, with MT4, I'm not using MT4 here. I can't game the system. I'm using live data. You're watching me execute. It is what it is, folks. Okay, now it's paper trading, it's demo trading, but I do it just to prove that I can read this stuff. I'm not trying to beat my chest. I'm not trying to brag, but I just want to finally put this to bed because it's still, you see people talking all the time. When they do that kind of talking, you take them back to these videos here. You link these videos to them and let them choke on it. All right, so we have the 1 minute chart. I went right into the 1 minute chart because we're starting with a bullish bias. And at 9:30, we see the market does, in fact, take out a short term high. It declines. I'm not interested in going short. It does not give me a pattern anyway. Notice that there's no fair value gap revisited. The market creates this relative equal low, starts to rally, trades up into the afternoon in here. I want to see it create a buying opportunity. Now, the logic behind all this is we're in a day before Fed chair speaks. So there's going to be very low volatility as a result of that. So it's going to be a small range day. Doesn't mean you can't trade it, obviously, but it takes a little bit more experience. Now, I'm not saying that you should trade ahead of Fed Chair Powell speaking or any future Fed chairman, because it's going to be a very quiet day, usually like this. Okay, and it's important to know when the volatility is likely to occur and when also the volatility is likely to shrink up and get kind of like lethargic. If you look at the S&P at the top, you see the drop down relative equal lows, and then we have the same similar pattern here. But look what Nasdaq was doing. See that lower low when S&P was saying I don't want to go that low, so it was resisting going lower. Then we retraced higher, just like this Nasdaq did, but then Nasdaq made a lower low than that of 10 o'clock in the morning. While at the same time, the S&P said, no, once again, I'm not going lower than the low I made at 10 o'clock. So we had a divergence here and here. No indicators, folks. I'm using intermarket relationships, and this is what I dub SMT, Smart Money Technique or Smart Money Tool. Now, the importance of that is I already had a bias that's bullish. There was no short trades that were lined up with this model today. There was no interest in wanting to be short. I want to focus on being long. So we're in the 1 minute chart here, and I want you to take a look at what we have framework-wise. Obviously, you've probably already seen the short video compressed today, but looking at price action like this, yes, you can see there is a rally up. It breaks the short-term low, a fair value gap. It trades up into it and breaks down. Big deal. This doesn't fit the criteria because the displacement leg here would require us to see a fair value gap above 50% of the high and the low of the displacement leg, and we don't have that. So nothing here fits the model for a short. But watch what happens. The market creates a run on sell stops here, and then rallies. Retraces back down into a fair value gap. I've seen this happening, but I was trying to get the recording software that I use. And by the way, let me just throw this in here because I see people asking. My website address as a watermark, TradingView doesn't do that. Okay, I use my Camtasia recording software that helps me do these videos. It's just an application you can overlay like a text call out, they call it, and that's what it is. So it's really when I'm doing the recording talking, there is nothing here. It's a blank chart. And then at the end of the recording when I'm editing it, I'll just add in my website address and something like that. So have you seen market trade back down in? And I was trying to get the Camtasia Studio to open up, and sometimes it doesn't open up and give me what I need, so I have to close it down entirely and restart it. And the whole time this candle was doing its business, and I wanted to see it return into this fair value gap once more, and I got in on this candle here. And we'll look at the relationship between the Nasdaq, which was a little bit sloppier in here, versus the S&P, a little bit more structured here. So the fair value gap in here, this candle in here, it wicks down into it, and I want to get close to this fair value gap without it running too far away. So I kind of want to touch a little bit tonight with close proximity entries. That means you might not get so precise with your entries. You might fumble with your order entry, or something might happen like it happened with me. I wanted to record me entering, not just simply say, here's a trade I took. So I wanted to show, obviously, me getting in, putting a stop, managing the position, and adding the second position in here. What do you do in this situation if you miss the ideal entry? Well, as long as you're getting in there really close, or like I'm suggesting here, a close proximity entry, I don't think there's anything wrong with it. So if we are looking for entry patterns, the idea is we want to get into where our model is suggesting it. So we're seeing the market trade lower, lower, lower. It's failing to make a lower low like NASDAQ. And we have this low that's probably not going to be taken out because we're bullish. The market rallies up. We have a short-term shift in market structure. Then it trades back down into the fair value gap. Look at the opportunities to go long. 1, 2, 3, 4, 5, 6, 7, 8. 8 candles. It gave an opportunity to get in this area here, either inside the fair value gap or in close proximity to it. Now, when the market starts to rally, I have one more indication that the market structure has shifted again, bullish, with these highs taken out here. And then we have a small little fair value gap there, and then you watch me add more. A little order came in, filled it. I only had 1 3/4 handles, okay? 7 ticks if you want to think of it like that. I had 7 ticks of heat against me on this little candle here before I started running in my favor. I took a full pull off here, and I did not get the highest high. I was a little disappointed in that regard, but the candle obviously hit it there, and we'll go over to TradingView and look at the business. All right, we're over here on TradingView. This is live. You can see the time of this recording. This is where I'm sitting down at the computer, and the market trades lower, creates that short-term run here, rallies, breaking market structure to the upside, trades in the fair value gap, and the secondary fair value gap then runs up into the liquidity above here. Now, if I add the executions, I want you to see, look right in here, and up here where you'll see the exits and entries, respectively. So you can see there's that candle, that entry, 3,994.5, 3,996 and a quarter, and it went down to 94. What's the low here? 94.5. So it was only less than 2 handles heat against me before I started rallying there. This one, 39,950, was right in here, and the low on this candle, 93 and a quarter. So 1 and a quarter, no, less than 1. Yeah, less than 1 handle of heat entering on this candle here, and the next candle had a little bit of retracement. So very, very, very tight placement. And this was not entering in the fair value gap. It was in close proximity to it. So the underlying idea was it was going down in here to go higher, retrace into that to go.
Oh, hello. So we actually failed market structure shift here. We could potentially be either making deeper retracement I'm gonna get rid of these thingies. Keep the lines though. Yeah, so we'll expect the price to have a market shift up here. It may. It's the 1 minute though. May even come back a little bit deeper. We'll see. We're getting the same shape on all pairs. Let me see what DXY is saying. Because yeah, we could even go deeper because we could go higher. We could, like, there's loads of different areas price can reach. Because we have this order block as well. I just didn't draw it because I don't want to have too much of a cluttered chart. There's order block here, which is tagged in too. There's also this, but I'm generally speaking around 9:30, whichever zone it gets to. Around this kind of time is when I'm gonna say, okay, I'm willing to see that as a buy. But either which way, for us to even enter a sell for DXY, so for buys, we would need for the market to shift to happen. That will give us the final confirmation. Then we take that. If that happens, we then look for a retracement back into that leg, and that will factor in our buys.
Go higher, and you saw me map out all this stuff here and call it up, and business is done. But the exit up here, 4,022.5, and that's that. You can see there is no short positions in here. No short positions over here on that business. And on NASDAQ, we'll pull that up just for completeness sake too. Okay, and no executions here. See? So all the business was done in the S&P today. So my question to you is, when you see these videos, and I'm trying to illustrate, obviously, that I don't need to fraud anyone. The things I'm teaching you, I think that you're seeing evidence that it works. Hopefully, you guys have seen enough with this here. Do the math, folks, okay? In less than a week and a half, how much more would you see this compound if I did it for 6 more weeks or 5 weeks? Is it hard to imagine the things that I did on Twitter with MT4, not a rented MT4 server, literally pushing a button, putting the orders in, doing the whole business, okay? I know a lot of you have just discovered me, and you're seeing people post stuff about how other traders or other mentors or other teachers, they fake their positions. I'm open about paper trading because it's compliance. I'm not legally allowed to give you trade advice. So I'm protected by my discussion in paper trading because you cannot make money with paper trades and you can't lose money with paper trades. But I've always said this from the beginning. I've dubbed myself the demo baller. I champion that name because I want to make sure everyone knows that I'm not promising you profitability. I don't dangle a carrot in front of you and saying you're going to do what I'm doing here because you're not going to be able to replicate this. You're not, okay? Don't be deceived by seeing me do this again for like the 5th time, running up an account like this with breakneck speed, velocity. And this is just casually doing it in a tight range. When there's large ranges, I could have easily taken this over to $1 million already. But it doesn't prove anything except for the fact that I can read price action. That's all. That's all I'm showcasing. I'm not trying to say I'm the best. I'm not trying to say that you can't make money in other things. I'm just saying I know how to read these candlesticks. I know what they're likely to do most of the time before they do it. Not all the time. I take losing trades. But when it's really likely to work with the algorithm, I'll be dialed in. You can't fake what I'm doing. You can see me executing the trade. You can see me managing the trade. You can see the orders entering and filling. They pop up. They verify the whole thing. No replay button up here. None of this stuff. Okay. See how that's blue now? Like you can't create that same scenario. So I'm hopefully satisfying this discussion that people like to bring up all the time about rented MT4 servers because they couldn't wait to put that on me because they watched me do just like this and I ran up to $5 million in a little less than 1.5 months. Okay. So I understand that doesn't seem possible. I understand that people that would be able to do what I'm doing could very easily go out there and defraud people. I'm telling you it's demo. I'm not saying that I did that with real money. I'm just saying that I can read price action. I can see these patterns forming. And even with these other folks out there with fake MT4 servers and MT4 screenshots of making money and all this other fake withdrawals, I made fun of all that stuff. I trolled those people on Twitter. Now I'm about to go back to Twitter. This time, I'm not going there with that intent. I'm ready should someone want to bring it, but I'm not there or going there for that reason. The reason why I'm going to Twitter is I miss being able to do my small little vignettes where I would do recordings of me either taking a trade or reading price action and having some short little clip, 40 seconds long or less, of music in the background. I miss doing that. Maybe it wasn't always your cup of tea for my music choice, but I have a very diverse palette for music. And it's just one of those things I enjoy doing. So it might not be worth it for you to follow me on Twitter. Or it might be. I don't know. But I kind of wanted to clear the air for the last time and show you all one more time where I don't need to do what frauds do. Like I can see this stuff before it happens. And you can learn how to do this too. You can read it before it happens. You can see it. You can have faith that the things that you're learning here are rooted on sound logic. It's not randomness. It's not retail logic. These are things that are algorithmic. And I think today was a testimony to that. So tomorrow's going to be very volatile. Be careful. Do not try to trade tomorrow. You'll probably hurt yourself if you do. Or don't listen to me and learn the lesson the hard way. Until I'll talk to you next time. Be safe.
So what I've now realized for speed purposes,
All right, folks, welcome back.
I'm going to summarize the first part of the episode, or a part of the episode where I don't want to analyze it. So I have questions during when I'm watching, and I'll just summarize it now. So why was we bullish? Because he didn't really go through the process of the daily kind of breakdown. So that's why I wrote that down. And then the SMT divergence, I've never really looked at it, but from the fact that I'm utilizing 3 different pairs to have an opinion on DXY could potentially fuel the idea of me utilizing this in the future and it working. Then he used tape reading to which kind of links to the bullishness, because that's what he used to not only know he's bullish, but also to get the entry. So if you want to see the breakdown, so it's kind of linked to the first question. And then a reason why is because of time. Obviously, we wouldn't 2 days now, and from May 8th, we have 11 episodes to get through. So obviously, the episodes are a lot shorter, so we can get through a lot of them quicker. But the last 3 I'm looking at, and I need to get by Thursday, last 4 even, by Thursday, Friday, I want to knock these out. So that means from today, I need to try get to 37. So that is possible and plausible. So that's why I'm going to be doing this, plus we're also looking at live market. So another thing to note, well, I think we're going to have a deeper pullback. So this was the first liquidity I was thinking that price would utilize to then go downwards, because of the fact that I expect price to go up. But I realized that the speed that this is going up and the level this is going down, it doesn't line up with this being the liquidity now. It could still be here. Like, it can go down a little bit deeper, come back up. But at the same time, it's literally what we're looking for. So we still want this to be the market to shift. The only time we will take it to here is if we create a lower low. Then we will now move this to this high. And we may even see another high on a lower high on the 1 minute time frame. So again, we're still waiting. It's only just turned 2:30 anyway, or 9:30, sorry, which is 2:30 in GMT, which is the time where we start to look for proper entries, because this would be the Judas swing. When we look at DXY, we are just approaching the first zone, which is this order block right here. And in theory, the order block should be all the way over here, but that's on a 5 minute time frame. A larger time frame, this is an order block. So we have tagged into it once. I think we're going to push into it. Our original kind of intention is kind of here. This is the zone that stood out to me. So I do think it will go up even more, which would mean that we're going to have a deeper pullback. So there are other levels, like there's some equal lows right here. There's equal lows right here. And there's equal lows right here. So it could even pull back very deeply. But I'm going to wait until I see the model play out. So until then, I'm just going to keep an eye and pay attention to what price is doing. And then, of course, we'll get to see if there is a market to shift, then retracement, then we can buy into the sell. So, yeah, it's going to be a very busy, it looks like it's potentially going to be a very busy afternoon. And then we want to kind of end trades around kind of midday, as that's lunchtime, and we can expect some retracement. So that retracement may look even give us the entry. We'll see. But yeah, for now, we could probably just go into the next episode. He went through the close entry proximity, showing us that you can get it multiple times, which I like. And then, yeah. So,
So today we had Fed Chairman speaking at 2 o'clock in the afternoon. You can see that here. Now I'm going to kind of work backward today. And I'm going to talk about the 1 minute chart, work our way back out to a higher time frame. So it's kind of like a bottom up analysis. So ahead of the 2 o'clock in the afternoon Fed Chairman jaw voting session, we've seen this little juice swing here. And notice that it just fell short of the morning high. And the high comes here at 12,535 and a half. And over here in the morning session, 12,535 and 3/4. So it fell 1/4 of a point, or 1 tick short of that high. So it runs up after clearing relative equal highs, then breaks lower, no model short in here. Then the market drops once more below relative equal lows. Now, what are these lows here? These are the lows in the lunch hour, New York lunch. There's noon to 1. And I taught you in the mentorship that many times when there's an afternoon continuation to the upside, you'll see that the lows at lunchtime will get swept. And we're seeing that here. Now, it dug down deeper into an area which...
okay, I'm seeing some resistance here. I think that spiked up to 75%. we need to pay close attention here. So I'm gonna just hover on the markets for a little bit. So remembering we have take just tagged in the order block right here, and we could get that initial kind of changing character or changing direction, changing state delivery if we break some structure over here. So I'll be looking for the shift over here. Then that would partially confirm that we are ready to break to the upside. Look at my alerts on all three. I don't know if I can have 4. If I can have 4, I can put one on DXY low key. Okay, I'm limited to 3. How much is the upgrade? £13 a month. If I buy it annually, eventually I'll probably just get this. But what do you really even get? Well, does this mean I get quicker information? I actually have this. Well, you do get that anyway, okay. I don't know if this is even worth it. That's a lot of money, but it's like, I've never really used this. Probably might just go essential and just get it annually, and then 155 the whole year is not bad, and they do discounts around kind of end of the year. Interesting. I know, yeah, we can't get that unfortunately, but okay. Minus 55%.
I did recording for Twitter today.
Actually, I wanted to do a quick break. So if you notice, we have a small change or big changes made to the website. Are you ready? We changed the UI completely. The UI before was a bit dark. It didn't really showcase what the website was about, and I felt like it could have improved. So I changed some of the wordings, and I really like this, and let me explain why. The journal that shows yourself, I think I was talking about it earlier, right? Where maybe it was off stream, and it's about the journal being a mirror. When you look at yourself in the mirror, you're able to see things on your face that you need to adjust in, whether it's your hair, maybe you have a spot, maybe you have a fluff, maybe you just woke up, you have sleep in your eye. It just helps you to fix up your face. Personally, I haven't left my house. I don't even know in how long. It's probably years without looking at the mirror before I leave. That's how important a mirror is that you must look at it daily, every single day. That's some serious consistency. To do anything every single day, you're consistent at that thing. Not diligent, but you're consistent. So what does that mean? A mirror is limited because you cannot see the back of your head. You cannot see the back of your arm, you can't see your back. You can't see, there's some places that the mirror won't show. So what do you do in that instance? You would maybe get a mirror to look at you from a different angle. So you get like 2 mirrors, use the light to bounce off each other to look at different places you wouldn't normally see. But what's the key is that you're holding a mirror that you wouldn't normally hold in a certain position. Okay. The purpose of a journal is that you write down words, information, whatever it may be, and then you can then look back on it and it will tell you something back. For example, if you're journaling your trades, you should be able to journal your trades. All you're doing is just documenting it. When you look at it, you can see patterns in how you trade, whether it's patterns in your winning, patterns in your losings, and then you can then make adjustments. But the point is that it's meant to talk back to you, and that's essentially what a mirror does. The purpose of a mirror is to talk back to you, say, look at your face. You have a mark here, maybe get rid of it. Or you have fluff in your hair, take it out. Your hair is not really looking good. Maybe put some gel in it. That's what the purpose of a mirror is. And I feel like journals are just documentations. They're literally like Excel files where it's just you put your trades in and that's it. But where's the information coming back? And that's the purpose of this at the edge, is that it's a mirror. It's a mirror that mirrors you to yourself. And you can then look at yourself and say, you know what? I've been trading like this. I've been trading like that. And I want to change. Why? Because the mirror is telling me that there's a problem here. I've seen something. And that's the purpose of this website. So I kind of changed it with that kind of in mind. And you can see that throughout the website. So the journal that shows you yourself. That's the purpose of a mirror. Most traders lose because they cannot see their own patterns. For me, this is my story. So this needs to be on DXY so I can monitor the percentage. I remember turning from unprofitable to profitable. And the key was me seeing in a pattern in my trading, which stated that you're losing a lot of your trades to liquidity. What does that mean? Well, prior, when I was losing my trades, I thought I was the one making a mistake. I thought I was the one misinterpreting the rules. I was disobeying my rules. I thought I didn't maybe have the correct understanding of the model I was using. Until I realized when I looked at all my losses, I started documenting, looking at my losses, and I saw that a common denominator, common theme in my losses was price sweeping me and eventually going in my direction. So I was getting direction right, but I wasn't getting my entry / stop loss right, meaning that I was getting swept out. So something is manipulating the markets. Once I had that belief, I then knew what to look for. And then I started searching for other models. But I described that, and that took multiple months / years to discover. If I had a journal like this is the purpose of the journal, is that it's going to show you yours. It's going to literally be as honest as you can be. The mirror doesn't lie, right? That's a fact. It's what's in front of you. The mirror is there. So I am trying to create a journal that's as close to a mirror as possible in terms of trading, where it's going to show you your trades, but it's also going to highlight where you need to improve, highlight where you need to fix, highlight where you need to adjust so you can look better like you would in the morning when you wake up. So that's the purpose of this journal. And that's what I mean by IC Edge is the mirror. You can log every trade, surface the data, and let it tell you exactly what you need to change. This is only going to work if you're honest. A mirror that's dirty is not an honest mirror. A mirror that has lies, or if you lie in this journal, you're going to get lies back onto you. The same way you would when you have a dirty mirror, it's going to get in the way of something that you can see in your face. If you have a very dirty mirror, you can have a spot in your face, you don't see it because the dirt is blocking the way. So the journal is going to be as effective as you use it, which means that it's going to be honesty, consistency. That's what's going to make this really work for you. You can start for free. And I did some more information, telling my story a little bit. This is the why. So IC Edge was built because I couldn't find a single tool that handled everything a serious trader needs in one place, highlighting one place. ICT aware checklists, annotatable charts, screenshots, per strategy analytics, AI pattern detection, and a study binder, all without switching apps. Okay. The idea behind IC Edge is simple. Your data should talk back to you. Every trade you log feeds into analytics that surface where you're winning, where you're leaking, what sessions you perform best in, which setups are actually working, which rules you keep breaking. A journal isn't a record, it's a mirror. And when you see yourself clearly, you improve. Facts. So I want to highlight this one place. I believe you should have 2 monitors on the phone, minimum. Now, sometimes when I'm traveling, I only have 1 monitor, right? So I don't like switching tabs. I don't want to have 5 different screens, one for trading, one for entering trades, one for trading view, one for my indicators, one for monitoring volume, one for logging my trades, one for analytics. I want as minimal devices and screens as possible. So I want to include in IC Edge as many things as possible that is relevant to journaling and trading, to where you can literally just have where you enter trades, which is primarily I do on the phone, a trading view page. I think that's more important than a journal. And the trading journal itself. A trading journal that you can actually improve and doesn't need another 5 different screens to, have all these features you're looking for. I went looking for a trading journal. I genuinely was looking for somebody to do it for me, but nobody did it to the degree I wanted it done. There was always something missing. So I was like, you know what, I'm going to create for myself. Then as I was creating for myself, and I started to see, you know what, this is useful. I'm liking this and I'm enjoying making it. And I feel it's very impactful to me. Why not share it with the world? So that's what stemmed the why in terms of why I made this website. So everything's in one place. It's a reflection. That's on me. I need to make sure that this showcases that it's a reflection. How do I do that? By making sure the data you input converts into information you can process that is like a mirror. I like this UI. I had a different UI, as you know, before. So I changed the UI to this. You have some of the features you get and some of the charts you can see. And then bam. So this is the new landing page. I really like it because it even tells you some of the pairs up here for the day. Although it is lagging. I don't know if that's even correct. Okay, let's have a look at AU. Okay, we're yet to get displacement, but that's fine. It doesn't have to literally happen at 2:30 exactly. Let's just give it some time. Or 9:30 in this case. So now we move on to the dashboard, which is where your journals will be and the other tabs as well are. And you can see the UI has changed a little bit. We have a logo now. I do have a logo for the Instagram, but I'm kind of liking this because it wasn't really able to, it wasn't showing up. It was, when I put a transparent background, it wasn't working. So I created one from scratch. That's extremely simple. Okay, so now you have a balance for a certain strategy. Okay, so you can now actually put the balance per strategy. So I create a new strategy, create this as number 2. I can then have a balance for number 2, and then it obviously gives me a total, right? So that is an option. Okay, then I've changed the font. I like this a lot more. I like it not being as fully black. I think that's better personally. In the future, we'll get it where you can customize what theme you want. But for now, I'm opting for this, right? Tags still work the same. I just need to add back the fact that you can click on a tag and filter by it and other stuff. Trades still save as images, etc., etc. I'm looking at trades. One of the issues I had was once you put in some data and you click off, you were sometimes lose a trade. Now you can keep and close it. And guess what? It actually keeps it now. So that's now fixed, which is a big issue from when we tried last time. And then you can actually discard it. I'm going to change the pop-up. I don't like how it is. Oopsie. I don't like how when you enter a trade or when you keep it close. What was it? Oh, yeah. It would clip here. It shows it here. I want it to be in front. So that's going to be the next change. And then, of course, the tags is another thing that needs to change as well. But it's finally working a lot better. Filters work the same. You can edit your rules over here. Calendar is working the same as well. Analytics is here. We're going to change up some of the graphs to match what we saw on the landing page. AI agent is here. Cloud storage is here, showing you how to export it and obviously with the features you have. Contact is still available. The study journal, we're working on this. I'm not proud of it yet. Like, it's not fully how I envisioned it, but it is definitely somewhat quite cool. And it's there if you want to utilize it. And you can also add some ideas as well. So that's the update. I'm very much proud of it. I think we've come a long way and there's still more to do. So we're just going to keep grinding every week. Like I said, it's going to be having a lot of frequent updates. I'm aiming for once a week, but of course we'll do our best. So this is back to landing page, and I'm a big fan. So if you are want to use something that is of that nature, link is in the description. You can help yourself sign up. The premium feature is amazing. You get access to the AI tools. You also get access to little features here and there. You have unlimited trades. You're not limited to 50, and you can fully utilize the website to your advantage. So if you need a mirror for trading, you need to see what you're doing wrong. This is probably one of the best tools available for you in the market. I looked, I couldn't find it, and we're going to be consistently upgrading it so that you guys can really see and improve. So right now, when I'm looking at the markets, I'm looking at consolidation. price hasn't come up deep into a retracement, but it also hasn't had a market shut to shift. So we are at an impasse. We cannot enter the trade. We cannot really do anything because we don't have anything to do. So in that instance, we're going to go through some other pairs to see if there's maybe some opportunities elsewhere. So we're going to start here with the daily time frames. This is Euro CAD. I actually kind of like this. I like this. Wait, what is that? Oh yeah, that was when I was a baby. Let's save this. Click main. Let's say premium discount. Okay. So this is the high low. We're at the equilibrium. This is discount below. This is premium above. We want to sell it ideally in the premium, buy in a discount. That's the simplest way to describe it. So we are looking for areas of interest, which would be imbalances and liquidity. So I notice some equal highs right about here that will make this buy side liquidity. And I also notice down here we have equal lows, which is sell side liquidity. Buy side, sell side. We're closer to buy side. We've just created equal highs. So buy side is probably a little bit more stronger, though I would expect potentially for a buy side to sell side kind of distribution. Something like this is what I'm looking at. That's my bias. I'm bullish up into this buy side liquidity, which is these equal highs over here. And then I will be bearish afterwards. You see, we have a strong displacement upwards, but we are yet to sweep. If we go to midnight open and the session open, midnight over here, 8:30 over here, 9:30 over here, then we can mark out these things. So we have midnight open over here, and have session open over here. From here onwards, it's about due to swing, but we have this consolidation. Quarter range. Okay. I don't like this at all. Let's see if there's any clean. Quickly scan. Hold on. Okay. And a lower here. Over there. Let's count. And 1360494. It's literally the same. I cannot say that is a swing high. This is the same as well. So for this, you have to have it here. Just on the 5 minute, we can make this the high. And again, consolidation, eh? This went from one of the best days of trading I could possibly had to, is there going to be a trade? We'll see though. Okay, let's go back to videos. We're just going to watch it again.
And my chart didn't have this. I thought I had it because I was looking at the monitor, but this is the imbalance that I was looking at. It unfortunately doesn't appear in here, but it's there obviously, and it's below the relative equal lows. And market drops down below that, and then all of this right here was manipulation, and there was lots of manipulation. Initially, the market rallies up, and what I was outlining here at the time of the recording, I had this actually misspelled. I had it racked. It should be raked as it should. I think that's the right spelling. Even questioning it again now. But basically, what I was implying here is that long holders were raked across the coals, not permitted to profit on the 12,553 and a quarter run. So it starts off like it's going to go up to that level we were looking for, and falls short of it and breaks down. So what's actually happening is buy stops are being triggered. So anyone that wants to go long on like bull flag patterns and things like that, or breakout traders, they're buying and then they're getting taken against their long, withdraw out until they're just stopped out, or if they don't have stop loss, they get squeezed out, so they can't take it anymore. They just bail out. Below relative equal lows, any long holders from the morning, they have trailed their stop loss below here. So they take them out. Why? Because they don't want them being able to profit to the real move. What was the real move? I hinted at 12,553 and a quarter. That was the drawn liquidity. So we took out the New York lunch lows here. And what I was suggesting here is shorts are about to be squeezed as it rips higher into 12,500. Oh, that should be 553. Sorry, that's a misprint there. You all know what that is. This is right here. But I was being facetious while I was recording because as I was watching it run up. Then it broke down. I was like, okay, they're going to take the liquidity out below here and dig into this imbalance, pick up some more orders. I got one off as far as a long. It had a really poor entry, but I was really focused on just being below these relative equal lows. That was fine. And my stop was here, as you'll see in the little vignette I put on my Twitter feed. And you can find me on Twitter at the @ capital I underscore AM underscore the TT underscore ICT. In other words. So anyway, that little recording shows me getting in here and it's below the lows. And I was outlining how this is not a fair rate. Go short at and it's resistance. Don't look at it like that. It went up a little bit, made an annotation rather, that this was not resistance. It's going to lift off from here. And went down to an order block, started rallying. And I was basically outlining the internal dialogue of those individuals that may be short from like 12,530 and their stop loss will be right here. And I was kind of saying, what would you feel if you were short from up here? Would you feel safe? Certainly, you would feel safe. But I said, watch how that changes. And then all of a sudden it starts running up. And then in here, we have order block, trades into that multiple times, rallies up. Fair value gap, I outlined that. It didn't get into it, but I was allowing for that type of movement. And then at 3 o'clock, the algorithms will start to spool price in the direction of liquidity, which was at 12,553 and a quarter level, which it hammers there. And I'll put the business right here. And you'll see what you should be seeing. Well, I told you my eyes are not that good. Oh, here it is. So about 12,417 and 3/4. So just below this 20 level here. Mainly focusing on this because I missed the opportunity of getting in during this little imbalance there. So that fair value gap, I wanted to be in it there. But unfortunately, I didn't get the position on in time, and it was over here on this candle. So I wasn't quick enough on the draw. So the market trades back down into the order block, and look at how it delivers with that fair value gap. Look at that. Beautiful delivery. Revisits there with the order block, rallies up, pause, sends it higher, order block, sends it higher, consolidates right below the target we've been looking for, and then they pump up into there here at 12,553 and a quarter right above. And again, the fill, and exits, and that's the business there. Let's go and take some of this off. We don't need to see this anymore. We don't need to see that anymore. We don't need this. And don't need that. Okay, and I'm going to take you to a 5-minute chart. Okay, now it doesn't look so obvious in here as to what may be available, but we just bumped below that high early on in the morning, then broke down, and all the liquidity resting above here was treating the retail market like, hey, you can trust us. This is resistance. It's not going to go up there. And then when it starts to sell off like this, Notice that my model did not give a setup this morning, or not this morning, but this afternoon. It didn't give a setup in here. Even though it did run buy side, it did sell off. It did not give a setup. Notice that? It's important to notice that. So some of you are fearful. What happens if I take a trade in this wrong? Hopefully you see that, now it's not like this all the time, but you'll find that when the market's really in sync, these algorithmic principles will not appear in markets that are not likely to deliver as I'm showing you. So it's not a panacea. It means it's not going to work all the time. But hopefully you can see that there are times when the market does sell off, but it doesn't give us a setup. But then it creates the real move the other direction where you can find my setups and the formations of the fair value gap and such. So obviously you can see that the market did in fact trade down into the imbalance on that 1 minute chart, and it rallies from there into the 12,553 level. We'll take that level off now. And I'm going to go out to a 15 minute time frame. Don't want to spend too much time here. We have an imbalance in here. It trades down into that as well on the 15 minute time frame. Optimal trade entry here, and rallies up to the minus liquidity. Again, aiming for that 12,553 and a quarter. And we'll look at the 60 minute chart. Okay, and the market trades back down into all of this here, and rallies up. And this was that area I was telling you about a week or so ago. So this is what we're looking for. I mentioned that on my community tab on my YouTube channel, and we have now just pressed up into that area. So let's go over here and do this. And I think we'll use this one as the title. You can see we did in fact clear that in. That's where that 12,553 level and a quarter rather came from. I'm not suggesting that we're making a high here to go lower. The next area on the outside, it's really sloppy over here. I'll look for this one here next. Oh, is that high? 12,624 even. And if you start to really run, we can revisit this area here, but I'm not going so far as to say that for right now. But just look for this one here. That's a nice one to look for the next upside right there. I think that's a fair one to anticipate and study. And I think that is going to be it. Nope, I'm going to show you one more time frame. The daily chart. Oh, I can't get that to pop up. There we go. Relative equal highs in here. We ran up into that. So that's that whole business based on that daily chart, as I was talking about in, I don't know what it was recently in the mentorship on YouTube. So hopefully you guys can see that that is in fact what we were working with for daily bias. Yes, the market did in fact create a big run lower, and then create another run lower here, but that wasn't my setup. I was drawing everyone's attention up to the 12,553 level, and this was the run that I liked, and this is the one that was the hunt. Okay, and there's that little one here and there. So anyway, not a whole lot of money through that paper trade, like over $5,000 in terms of hypothetical profit, but hey, it worked. You guys can see the effects of it, and it's a little bit of an advanced idea, but I did teach about the general factors that go behind PM or afternoon session trading. If you're bullish and it consolidates in lunch, find the lunch lows, wait for it to run that out, and then they'll resume. And it's right out of the teachings in this mentorship on this YouTube channel. So hopefully you find this one insightful, and I'll touch base with you again on Thursday. Lord willing.
So I was on mute this whole time. Nice. Anyway, keep it moving.
All right, folks, welcome back. This is going to be a short little video on the S&P 500 June contract 2022. This is our daily chart. And before I get into it, just let me remind you that I do not use WhatsApp. I'm not going to be in the comment section asking you to reach out to me. Okay, hit me up. Let's talk. None of that stuff. That's all scammers. So I'm never going to ask you for money. I'm not going to direct message you. I'm not going to direct message you on Twitter. Okay, all those people are just trying to scam you, trying to pretend to be me. I'm not asking for your money. You're here to eat off my table for free, and I'm happy to do it. So just know that those accounts are not me. Please report them and ignore them. All right, so the S&P 500 daily chart. We're going to look at this day here. And before we get into it, I'm going to bring your attention to the 16th of May. On that low. This morning on Twitter, I was not able to participate in the early session movement on the stock indices because I've been trying to do things to share with the audience that has been mainly following me because of Forex. I noticed a lot of you are starting to bellyache and complain that you want to see Forex, and I understand that, but even my paid membership group, they have seen very little in terms of Forex too. And I'm pushing this asset class because this is what volatility is. Price is price. It doesn't make a difference. When Forex starts moving around big again, trust me, index futures will get slower and quiet in comparison to Forex. Trust me when I tell you the currency markets will eventually, within the next 12 months or so, probably start having some pretty wild movement. But until then, we have to look for volatility where we can find it. And right now is in the stock index market. So if you're a hardliner, if you're a purist and you don't want to see these types of moves in this type of market, I understand, but learn from it because it works the same way in Forex. Just know that, okay? So I mentioned on Twitter that I was in the dollar CAD this morning. I went long on that one on its high impact news at 8:30, and it was a snooze fest. It took forever just to move a little bit. Obviously, I shared that on the Twitter feed, so you can again go and look at that. So I mentioned I was going to go to have some lunch, and then I would look to see if there's anything for the stock index market. And I participated in this move I'm going to show you today here. I hinted at where the market was likely to go to. And let me state this going forward because I had Barry Mason over there on Twitter reach out to me saying that the bar has been lowered for calling out trades. I don't call out trades. I'm not going to put you in a trade. I'm not going to give you an entry, a stop, a target. I'm not going to do that. I don't spoon feed. I don't do that with my pay group. What I do is I point to where the market's going to go. I've already taught you how to get in. I've already taught you where to put stop loss. I've already taught you how to put your limit orders in. I already taught you all that. Now the problem is that you don't have the experience to know where it's going to likely go next. So this morning what I did was I drew everyone's attention to the low on the 16th of May, 2022. Now, if the market is above, let's go into a lower time frame chart. Okay, and if we're in the market and we're up here, and I'm suggesting to everyone, think about this low over here on the 16th. What do you think I'm drawing your attention to while we're up here and I'm drawing your attention to this specific area, the lows of May 16, 2022? Do you think I'm referring to it as it should not come back down here? No, everyone should understand my style is we're aiming for liquidity. So if it's up here and I'm pointing down here and taking your attention down here, I'm acting like a scout. You're the sniper in training, whether you realize it or not. Okay. So I'm trying to point you to where you should be aiming. And you have to do the work of scoping it up, pulling the trigger, and dealing with all that. Okay. So there's no shortcut to this. There's not going to be an ICT on Twitter or on YouTube that sits down in front of you and says, okay, everybody, are you ready? We're all going to buy right now. We're all going to put our stop loss at the same place. We're all going to put our exit order at the same place, and we're all going to ride these things, and it's just going to be happy, and that's it. I'm not going to do that. I never promised to do that. I'm not going to do it, period. End of story. No way. This is how I train my students. It works, folks. It does not work for lazy people. Okay. I understand that some of you just want to be handheld, but that's not going to happen with me. I don't do it. I didn't do it when people paid me. I'm not going to do it for free either. So you don't need me to hold your hand. If I point to where I think the market's going to go, it's your job to study and look for the opportunity. The fair value gap is what you're going to be utilizing. Okay. Some of you are fixated on only looking for the setup at the opening. Well, what happens if you don't get a trade at the opening? Can't you use a fair value gap to get involved with the move if it's going to go down to something like this? Yes. And that's what I did today. So let me add the annotations in the form of showing you the executions so you can see. I'm not sure why this thing's not popping up. Stay on there. There you go. All right. So here's where I entered. I did 4 contracts at 4,007 3/4, aiming for the 16th low. I didn't have a whole lot of time to be babysitting this thing. And late afternoon, this could have easily whipped up, did some kind of retracement, without any kind of stop loss trail down, and then maybe move lower. So just make it easy, short and sweet, to the point. Your attention was drawn to the 16th, the low on the 16th of May. Let's go into a 15-minute time frame. All right, so you can see up close candle. What do you think that is right before we start to go lower? It's a bearish order block. Draw that in time. It hits that order block on this candle here, dropping into a 5-minute chart. What is this? Doesn't look like fair value until you zoom in. Huh? So right in here, it's hitting. It overshoots it, granted, but there's a lot of volatility right now. This candle's high. Your stop would be above there.
We're seeing a deeper pullback. Which would mean that these are going to be dropping. And we didn't get the market to shift, which is not even what we need to enter. It's one of the things we need. We need the market to shift in a fair value gap form or displacement form, sorry, and then a retracement into that. So there's a lot of steps we're still waiting for. But DXY looks like it wants to continue going up, which is something we predicted anyway. It's just that it's moving very slowly. So it's that.
Hold on to the position until it starts to break lower. If you want to fine tune it, this is the one I shared on Twitter in the recording. Okay, so what I saw was this fair value gap here. It hit it, created what? What is this? What's this pattern here? What's these 3 candles here? It's a swing high. So as soon as this candle closed here, I'm going to go right here at this candle, just get in and go short, trusting the fact that we already had a fair value gap. We already went through it. We had a swing high, and it's bearish. I'm looking for what? What am I looking for? I'm looking for a run below this old low, which is May 16, 2022's low. So entering here, and I'm riding.
This is good actually because it is. Each slide has its own. I'll get 2 slides straight away. They're both blank. No. Maybe in the world, you know. I don't know. Anyway. It has live entry. And then it has a compound.
Out with a stop here. Everything is reduced in terms of risk. As soon as we start to break lower here and start moving.
I'm going to quickly grab this though. So Fair value gap, retracement, swing to high, entry.
We have a swing high and it's bearish. I'm looking for what? What am I looking for? I'm looking for a run below this old low, which is May 16, 2022's low. So I'm entering here and I'm riding it out with a stop here. Everything is reduced in terms of risk. As soon as we start to break lower here and start moving in my favor aggressively, I move my stop only because the volatility is so high right now. I just don't want to see it come back and knock me out. That's not fear. That's just sound money management. I'm not trying to take a losing trade. So here is the entry again. It delivers on the downside. I took my first partial here, one off here. In the limit order, you watch that fill on the little recording, the vignette that I shared on Twitter. Ultimately, we started going a little bit sideways, going into the beginning of lunch in New York. Here's your typical lunchtime consolidation. And then what's this? Stops ahead of lunch. Fair value gap. It's almost like it knows what it wants to do, huh? Breaks lower, consolidation again, trades lower, consolidation, bumps the stops here. What's this? Oh, this ICT just makes it so complicated. Hits it, sells off, sells out here, consolidates one more time, and trades and meets the low of the day. I think on this one, huh? It's the lowest candle low at 39.10. Okay. So that is what I did today. I did not participate in the afternoon session, post New York lunch. This is all I had to share today. Right there, 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 and there. Okay, that's going to be it for today. Hope you enjoyed this and found it insightful. Until I talk to you tomorrow, be safe. All right, folks, welcome back. It's going to be a short little commentary on basically what I went with today, giving commentary through Twitter. You're welcome to go over to my Twitter feed and go through it. It's a lot because I was going all day long with it. And I was kind of walking people through their own charts to kind of get a better feel for what to expect and where the real setup was going to be for today. Before I get into all that, just know that everything that I said is time and date stamped, so that way there's no tomfoolery about it. And only the diligent are going to want to go through something like this. And I put the readers on Twitter through the meat grinder today. I literally took them through every minor fluctuation, explained why it should do this and should do that, and ultimately setting up way before it happened the 3 o'clock to 4 o'clock short. Outlined it in detail, gave the reasons why it should take place. Everything's there, and everything I'm going to say in short highlight here is obviously found in the tweets. So we had an outside day here yesterday, big down close day. An outside day is a day that's higher than the previous day and lower than the previous day's low. So here's previous day's high, it went higher. Here's previous day's low, it went lower. So all of this range is outside of the previous day's range, and it closed down. When this happens, there's typically this type of price action formation, but it's really included with the odds in your favor if you're trading down to an old low but fall short of it. Okay, this is usually where that double bottom idea comes in, and it feels safe to.
So give me a little break. I want to restart. I missed a couple of points there. Only 9 more episodes, ladies and gentlemen. Only 9 more to go. I really want to get into this live trade so I can stop being distracted. But it's literally just consolidating. It's not doing a single thing. Okay, still pushing up. Okay, so it's a good rejection. We just need to mark the shift now. He looks like he really wants to do it. Just need a marker to shift. Not just a marker to shift. Well, yeah, the marker to shift, and then obviously you can then start looking for actual entries. It looks like it may happen, guys. I can't believe it. It might just happen. Now we just need to look for displacement that causes a market structure shift. We need the XY to break. If it goes to 1 minute. It's very weak. In theory, you could classify it as a break, but I want more of a displacement. Still gonna watch the XY though. Watch it from the 5 minute. It's still potentially going up, man. Oh, back to Steam membership.
All right, folks, welcome back. It's going to be a short little commentary on basically what I went with today, giving commentary through Twitter. You're welcome to go over to my Twitter feed and go through it. It's a lot because I was going all day long with it. And I was kind of walking people through their own charts to kind of get a better feel for what to expect and where the real setup was going to be for today. Before I get into all that, just know that everything that I said is time and date stamped, so that way there's no tomfoolery about it. And only the diligent are going to want to go through something like this. And I put the readers on Twitter through the meat grinder today. I literally took them through every minor fluctuation, explained why it should do this and should do that, and ultimately setting up way before it happened the 3 o'clock to 4 o'clock short. Outlined it in detail, gave the reasons why it should take place. Everything's there, and everything I'm going to say in short highlight here is obviously found in the tweets. So we have an outside day here yesterday, big down close day. An outside day is a day that's higher than the previous day and lower than the previous day's low. So here's previous day's high, it went higher. Here's previous day's low, it went lower. So all of this range is outside of the previous day's range, and it closed down. When this happens, there's typically this type of price action formation, but it's really included with the odds in your favor if you're trading down to an old low but fall short of it. Okay, this is usually where that double bottom idea comes in, and it feels safe to, if you're trading like me, look for a run through that old low. But if they stop it short, it tends to be a choppy day, especially if you have an outside day with down close. So let's go into an hourly chart. An outside day with down close.
It looks so dark. I just had a thought of something one of my friends said.
So let's go into an hourly chart. All right, so here's the price action for today. We're going to look inside this little tiny little fractal right here. And I can zoom in here. All right. So we have old highs in here. If you look at the high here, it comes in.
Wait, he's looking at the next day, right?
Little fractal right. All right, so here's the price action for today. We're going to look inside this little tiny little fractal right here. And I can zoom in here. All right. So we have old highs in here. If you look at the high here, it comes in at 39, 33 and a quarter. I mentioned that level today. Mentioned it a few times that we were going to trade up, and it closed down. When this happens, there's typically this type of price action formation, but it's really included with the odds in your favor if you're trading down to an old low but fall short of it. Okay, this is usually where that double bottom idea comes in, and it feels safe to, if you're trading like me, look for a run through that old low. But if they stop it short, it tends to be a choppy day, especially if you have an outside day with down close. So let's go into an hourly chart. All right, so here's the price action for today. We're going to look inside this little tiny little fractal right here. And I can zoom in here. All right. So we have old highs in here. If you look at the high here, it comes in at 39, 33 and a quarter. I mentioned that level today. Mentioned it a few times that we were going to trade up to that. And I built the idea that looking at price, studying it in the way that I teach it, it would be very easy to fall victim in this type of trading day, where it's choppy, it's listless trading back and forth, and how to anticipate it, what to look for. And I want to go into the 5-minute chart real quick. Okay, and here's a 5-minute chart, and I want to add some annotations here. So here is the 39, 33 and a quarter level. That's why that level was mentioned in the tweets. This is the low at 38.72 and a quarter, and the old low on the daily chart that did not get traded through is at 38.55. And notice we just fell short of reaching that at 38.56. So we went one handle short of that, started trading higher. And I mentioned how the market many times can present opportunities that look like it's likely to form a setup, but it really doesn't really come to fruition. And if you look at the range here, okay, I'm highlighting this fair value gap right there. Okay, how we traded up into it, started working lower, created a small little fair value gap in here, bumped into that, traded lower, nothing really in here to work with in terms of the model. So nothing here is a short. We were talking about all that this morning. So as the market was trading around in this area, I mentioned how it was likely to be a 50-50 probability. That means it's likely to go higher just as well as it is likely to trade lower. Okay, so what's the benefit in that? Obviously, anybody can come into it with a 50-50 expectation, but it really statistically moves to 50-50 when we start trading back into the middle of the range. Okay, so this imbalance here, the fair value gap, it should have offered a little bit more movement lower. Why would it go down and take out the short-term low? It went below the short-term low here and then started rallying, working towards the relative equal highs right here. I mentioned early on that it would go to 39, 33 and a quarter. That's where it would go. But I favored, in other words, in terms of bias for the longer term, I favored the 38.55 level down here for the sell side. I don't think that they're done with it down there, but we have to take every single trade idea based on its current dealing ranges. And what's a dealing range? Well, a dealing range would be like from this high down to that low, and we measure those. Yes, it trades up into that imbalance and
Hold up. Hello. Now then. Now then. I don't know about you, but I feel like that's a market structure shifter. This is the sniper entry. We've had a market structure shift, it displaced. We drew the fib from the high to the low. Terrible fib. Give me the other one. Nice. Can you not say text instead? Okay, no. What would you... Yo. There's one here. Yeah. We've had the market shift here. It's actually the only fair value we can actually even enter from. Okay, there's one over here. The only thing that hasn't had a... Let's see what the DXY is saying actually. Okay, we've had a market shift here. And this creates this area. to look for fair value gaps, which probably one you can enter will be this one. So that's kind of the okay. Where were we in this episode? Let's start. Now, literally, all we're waiting for is a pullback. I know my chart's messy, but I'll clean up when we're looking for entry. There's multiple different types of analysis happening right now. One thing that's concerning is lunchtime is almost like halfway to lunchtime. And that's where we can expect some retracements. So we'll be looking at that. Where's my fib? Into this one. Go to that, which we can keep it. Okay. We put the mentorship on hold. If we've done quite a few episodes anyway, but put that on hold. We wait for this to potentially have / hit entry. Then we can go from there. What can I do as a break? Great. There's one here as well. There's a lower hanging fruit. Let's get rid of. Let's just focus on the value gap for entry. Red arrow is annoying. I'm not gonna lie. Don't need the vertical lines anymore. We have the horizontal ones. Okay, you don't need any other tab right now. Focus on this real quick. For the 5-minute time frame. There's a fair value up here. Just help us visualization. There's orange. This is a There's a family up here. Get rid of that one. Yep. There's some of these arrows and lines. Text is annoying. This is no fair. There's no fair value gap here. A small one here, but I don't like that. Only valid one on the AUD USD. literally just monitoring now. But we can't get in until we have our thing. What's DXY saying? Okay, DXY's had one market structure shift, two market structure shift. Brilliant. So we should expect that pullback to happen soon. We are rejecting off of the order block rather than pulling deeper into the zone, which we accounted for. So we just need our retracement, and then we can officially enter some trades. So I'm gonna prep some of this. Get 3 of these tabs open for each pair, so we can save time. We have one for EU, AU. Will be within 10 pips. UP and G. Give it a sell out ideas. A little bit. So essentially, why we keep adjusting is because within this displacement range, you want to buy in a discount. So anytime price retraces, you only want to look for fair value gaps with below this 0.5 to kind of aim for your optimal trade entry. So that's why we keep adjusting this, so we can then see which was the lowest hanging fruit we could use for our entry. There is possibility it just keeps going and delivers up. But we'll see. My main reason for this bias, like we said before, is this liquidity from the daily time frame not being swept. We only created equal lows right here. I feel like price came close to it, created highs, retail bought it, didn't come back up to the level they were hoping for potentially. Came back up to this order block right here. So order block on a larger time frame. Tagged in once, tagged in twice, displaced downwards, had the market to shift. Now what we're looking for is retracement. We did potentially see we're willing to enter if price retraced here. That didn't happen. Price just kept going down, and it's still going down, but we still are anticipating a retracement. And that will be our entry signal. So the main thing we are doing is finding the lowest or the highest order block fair value we could use for entry, which is basically an area below the equilibrium fair value gap, as close to the equilibrium as possible. So AU, if we don't actually need this orange bar, it's aesthetically kind of nice, but not when we are trying to figure out to enter. So we have market value up here, value up here. Actually none here, but it's one from here to here. In theory, you can enter in on the equilibrium. Okay, continue to monitor. So we got the 3 pairs. Really to put a decent amount of money behind this. And yeah, got my MetaTrader open. Now we just wait. Now we wait. Okay, price is retracing, which is good. Was a big drop. Get rid of this just for. Don't need this anymore. Trying to declutter the chart as much as possible. Things that I can see without any assistance and leaving open. Okay, nice. We're getting that deeper pullback what we're looking for. Just gonna keep waiting. Yay, we're getting set up. Yay. Right, as you can see, price is now coming back down. We've had a sweep, we've had the break, we now retrace. Technically, you could enter here, right? Fair value gap, that's in the discount. Technically, you can enter this. Then, yo, it didn't even wait for like a second. We'll be targeting liquidity up here. This would be, we're not be targeting that. So, this will be about, I want it like this. Well, AU is actually triggered. Should be in this. What's the lowest fair value gap? The lowest one right here. Basically below the low. About 10 pips. Target later. AU. And 229. Bought. It takes so long. G, you can argue you have an entry based on the 1 minute. This is fair value gap that's below the 0.5. This is low hanging fruit. It gives about a 1 to 4. Good. One, 3, 5, 9, 7, 5. Be as quick as possible. Okay, now it's EU that's left. Time frame is that. Okay, I think it's 5 minutes, so we can take it. Alert. We're currently in buyers now. Now we need to find targets. So DXY, I'm expecting it to deliver now to this area here. That's the next area of liquidity. In other words, that's our liquidity from the daily time frame. This one we have this area of 1.5. Go to the weekly time frame. There is an order high over here. I don't know if that's where price is lining up. This is from the weekly. Our target probably be here will be our ultimate, but we would probably take partials around here. What about GU? In GU we have equal highs. There's a high right here. I think that's where we will break this down. We'll probably target this. Right here. That we can set our values. So profit 365. So AUD. Okay, so that's what we want. That's the weekly. Is 1.5. And ignore this. Just ignore that. And just target these old highs right here. Yes, there's a weekly over here, but hanging fruit. Ultimates. So 726676. Okay, then we can potentially take partials along the way. So extra 9 over here. And right here. And right here. Of course. Area. Yeah. Okay, so these are the 3 levels. Rename these by side. Take potential partials there. EU still dropping. Probably want to get a deeper entry into EU. Into right, so look at this. That's over here. Yeah. So send alert onto the way to the first side. Send alert on the way to the first side. EU. Having a deeper retracement. There's this, and there's also this entry right here. Okay. I think we're just dipping back just so that EU can get involved. This is low hanging fruit right here. And then yeah, below this candle here. Adds a couple of bits for spread. Like something like this right here. Maybe even just A5. And then zoom out real quick. Okay. Let you get into EU now. Yeah, about just under 10 pips. Let's just say 10 anyway. And about this amount. So 117,448. And okay. And those are our entries. AU, GU, EU. GU is the one that's putting the deepest into this area here, but it's at an order block right here, so should potentially start going up. So from here, we should. This is the area we need price to start dropping. Just add a little bit more cash so that there's a bit more. Space. We don't get margin called. Do you use very close? Potentially may have been stopped. No, we're still in. Very close though. And to be fair, there is some equal lows right here. So we'll see what happens here. This one came to this lower fair value gap right here. What's the XY looking like? It's rejecting from that area. We expected it to. And, there is sell side liquidity, which is kind of a concern. For some reason, there's a problem when I'm trying to deposit. A different method. Add a little bit more leeway here. For some reason, it took money from my account but didn't show up in my trading account. You don't get margin call because I don't have any other account I can use. See, this will be the most nerve-wracking part of the trade, mainly because it's drawdown, but it's drawdown we're willing to accept. We kind of predetermined the fact that we would, have that. So that's the main thing. Again, the deposit isn't showing up in my account. So I'm trying to locate where the money even went. It's not showing up, but it took money from my card. So yeah. Phone vibrated. My phone fell. All right. The only concern I have is lunchtime. Quite close. And then this specific trade out of the three is the weakest. These other two look better. I'm seeing rejection, but here we're playing with fire. So I gave a little bit of room because I know there's sell side here, so it's potential that we take sell stops and then rally up. But that's why I tried to deposit cash so I could have some leeway. I do not want a margin call, so I can't even manage this trade as well as I would have liked to. But in truth, this is quite bearish, I won't lie. Yeah, we've been stopped out here. Okay, so this one got stopped out. Let's see what's the rules of a re-entry. Probably won't, but okay. Well, I think what I'm going to do instead is just turn up the markets because I don't understand why my broker hasn't taken my money. Still not showing up in my account, so there's nothing much I can do there. We've done a couple of episodes of ICT. I do think this will still go up. I just knew that this equal lows may, turn up into sell side liquidity, but this could be experienced anyway. Nevertheless, I'm just gonna wait for these DXY. We're gonna continue with our bias. We're expecting it to drop from here, and technically it could go up, but we're gonna back the daily bias. If we're wrong, we're wrong, and we just move on the next day. Or I think my money just literally just came through now. Took its time. I'm not sure what the rules are for re-entry because we've had much failed that. Because of liquidity, we can have some leeway expectation. But then it becomes, do we need to see the same move again? Like a market shift. I think I'm going to leave the re-entry for now. We're just going to hold these two trades and see where they end up. Well, that's it from me. I will catch you guys later today or tomorrow. Most likely tomorrow, obviously, but potentially today. We do have some of these mentorships to get through in episode 22. So 32 that is. So we have 9 more, but only 3 of those are an hour long. We have 4, about an hour each. So we have 4 long ones, 5 short ones. So I think this week would have been finished. And then we may need like an extra week just to get used to the markets. And then from there we can improve. But it's been your boy CJIC. We'll keep you guys updated on Telegram for these trades, and I will catch you guys later today or tomorrow. So see ya. Peace.